Hello and welcome to Bloomberg Quint. I have with me this Monday afternoon the chairman of L&T, AM Naik, to talk us through not only what he made of Budget 2017, but what the outlook for his various businesses, especially infrastructure, is for the new incoming fiscal, that's FY18. Mr. Naik, welcome to Bloomberg Quint. I believe this is your first social live. We're live on Twitter. Hopefully soon we'll be live on Facebook as well. So welcome to the new digital age.
Thank you very much.
Well, delighted to have you, sir, on the show. Let me first start by asking you for your take on the budget. The government has increased the infrastructure spend to 3.96 lakh crore rupees, which they say amounts to a 10% increase in infrastructure spends. When you look at it as a percentage of GDP, it's broadly the same as budget 2016. There's not been any big dramatic change. Do you think that was the best way the government could have gone about boosting this beleaguered sector in the country?
Considering all other commitments that they have made and the elections in a bigger state and 4 other states was on, you know what happens at the time of election. You really have to make people happy, and therefore good amount of measures which cost money has also gone in the pre-election announcements, and that has to be spent over the next 1 year. So considering all these events, possibly they could not have spent more than this.
Okay. Does it move the needle at all as far as L&T is concerned? Do you believe it sets up an environment where you think there might be an increase in orders, in projects over the course of the next fiscal, or you are not optimistic about that at this point in time?
Well, I am cautiously optimistic in the sense that while it is short of what we possibly wanted, and the mega projects is something which is really what L&T does. So a huge amount of emphasis which has been put in affordable housing is not something which L&T does.
Right.
So in a way, our exposure to infrastructure of all kinds put together will be limited to almost the same thing, maybe slightly if at all better.
Okay, so at least as far as L&T goes, the budget does not move the needle at all.
You can say slightly moved.
Slightly moved. You finished the third quarter of this current financial year with a 1% improvement in top line. I'm sure you are not very happy with that improvement, though your profitability improved because of certain operating parameters that you were able to work more efficiently. But a 1% improvement in top line is deeply disappointing. You've revised downward your guidance for revenue and order book. What message are you sending, investors, analysts, and the rest of the community that FY18 is going to be equally tough or tougher?
Well, I think the order book is very good. It's over 2.5 lakh crores. So to that extent, the revenue, if the slowed down projects due to in private sector, primarily the non-availability of funding and so on, does move, and the demonetization has caused quite a lot of slowdown in the real estate. If that starts moving, which people think will start moving from June, then we should be all right. Next year we should grow at over 10%. And people may say that how can one go to 10? But while, for your information, our fourth quarter is always very, very large.
Let me tell you what some brokerages say about your fourth quarter. This is a report from Ambit. It says that the company reduced its revenue growth guidance from 12 to 15 earlier to 10% now. This implies a strong fourth quarter FY17 performance, 19% year on year, which largely needs to be driven by the infrastructure segment. While the fourth quarter will be good, we fear this degree of growth could be difficult to achieve. What makes you so confident that the fourth quarter is going to help you achieve this guidance number and is really going to be as good as you expect?
Well, the guidance which is revised downwards. I'm talking about.
But even
10%.
this downward revised guidance, are you going to be able to meet that at the end of the fourth quarter?
That's what we think we will.
So what about the fourth quarter gives you that optimism, sir?
Because there are a lot of projects which has advanced and which will come for reckoning of our profit, and there is always a fourth quarter where the budgets that the government has, our more than half the projects are government projects, and they want to spend that. Consequently, we don't have to slow down. We accelerate our execution always in fourth quarter.
Are you talking about state governments or central government?
Both.
Because the central government seems to have reached its spending capacity. Last I heard they'd crossed over 90% of fiscal deficit. I don't know how much spending capacity they have left in the fourth quarter.
So but it doesn't count on the projects which are already on.
Correct. Yeah.
So we are only talking about the project which we are executing now.
I know, but even for instance, roads, etc., we at Bloomberg Quint have reported that even though Mr. Gadkari has aggressively put his target at 40 kilometers a day, he was hoping he'll at least hit 30. That's also been difficult to achieve because of a variety of challenges that the sector has faced. So I'm not doubting what you're saying about the fourth quarter. I'm just asking if there are headwinds that could move you off path.
See, roads are not necessarily our core business. It is very easy. There are 20, 30, 40 contractors who can do roads.
I was just using it as an illustration.
Yeah, but it's important.
Okay.
Because you name the minister.
Right.
That his target of 30 kilometer also is difficult.
Yeah, he's acknowledged it himself, to be
Right,
fair. So
right,
I'm not criticizing it. I'm just saying
So
it's
where
challenging.
do we get big roads? We
Right.
get in Middle East, right? And we get sometime in a very, very strategically important roads. Like we got in UP a big road of 3,000 crore. Now we are just got another UP order which is also around 2,000 crore. But all the public sector which come up with the tenders of 800 crore, 600 crore, 1,000 crore, straightforward in the sense that the domain, the levels are flat, there is no complication, there are no river bridges, there are no hills where you have to make tunnels. Now, whenever the projects are difficult in the terrain in north or in east, we seem to be in a good shape. Like when we bidded for Orissa Road, there was only one bid, ours.
Okay.
But if you tell me that in Gujarat you go and build roads, it is difficult.
Okay, so you're confident the fourth quarter will deliver enough for you to hit that 10% guidance for FY17, and that you will do about 10% on the order book on the revenue top line in
Yes.
FY18. So a 10% growth in FY18 from where you sit right now.
Right.
Right, that's minimum is what you're expecting.
Yeah, because we might do little better.
No, I'm glad. I hope you do a little better. I hope you do a lot better. But this gives people an indication of what you expect the environment really will be, right? At the end.
I think you should know that it is not just the L&T'S performance. Last 4 years in a row, also the Indian economy was not doing well.
Of course.
I mean, you know, it was 5%, 5.5%, at times at the borderline of 6 at best. But we made up with more than 30% orders coming from
International.
abroad.
Yes.
And a lot from Middle East. Now that the oil price have gone down for the last 18 months, the spend has come down in the Middle East. Consequently, the lot of projects are slowed down, lot of projects are halted. And therefore, our ability to make up 30% from Middle East to really target 12 or 15% or even more has become difficult.
Sure.
So we are looking at new geography, we are looking at North Africa, we are looking at East Africa, we are in Far East, Indonesia, Malaysia, and on electrical transmissions and so on, even Myanmar and Central Asia. So I think the efforts in these directions started about 18-24 months ago.
Okay.
And I think its benefit will begin to come in 17-18.
So could you elaborate for us then whether you expect to maintain that 30% share of international projects? You might hope to be able to expand it further to counter the lack of deep growth in India.
On the contrary, 30% may look like more like 22 to 25%.
In FY18.
Yes.
And that's because you expect smaller orders as you move to newer geographies.
One thing
or you
is
expect
smaller,
better growth
all the
domestically.
new geographies are not the one which comes up with mega projects.
Okay.
They are all $50 million, $70 million. If I go to Qatar because of preparing for the football game, one order is $500 million. So one thing is the order size is smaller. Second thing is we are also learning those geographies.
Sure.
I told you it is only 18 to 24 months back we decided to select few geographies and go ahead with it.
Right.
And it is going to take some time before it reaches to a level of maturity and therefore the speed at which we can grow.
So it's smaller orders and the lack of any big continuing orders in the Middle East. So smaller orders in new geographies, lack of continuing big orders in the Middle East.
And new geography being learnt also.
Yeah, and new geography being learnt, which will mean that your international business will be about 22 to 25% of your revenue.
5 to 7% less.
5 to 7%
And that
less.
5 to 7% plus the growth we have to make up in domestic.
Do you think you might be able to do that?
We are hoping for the best. And therefore, every time we were saying we will grow at 15%, I have moderated already down to 10.
Right. So you think 10 might get reversed further downwards in FY18?
Well, your guess is as good as mine, but we hope for the best, and I think we are going to try hard to really not only do 10 but perhaps slightly improve on it.
You know, I want to come back to the irony of how an infrastructure starved country like India for the last 4 years has not been able to move the needle on infrastructure. But before I do that, since you've spoken extensively about your international business mix over the next fiscal, what is that going to mean for your margins? You've had a good margin beat this third quarter, but largely that's come from, you know, better working capital, sort of some efficiency in, you know, in the way you've run the business in the last quarter or so. What is your outlook on margins and profitability in the next fiscal?
I think we have done very well, while we may not have done well in terms of revenue, which we will try and make up as much as possible in fourth quarter. But up to third quarter, you can see we have improved our profitability by 39%. I mean, that's perhaps one of the best you can get in industry, not only in infrastructure, but all industry put together. So therefore, we are putting more and more emphasis, while the prospects are little less, in operational excellence and many other improvement programs operationally, and improve the margin. So that is something which we will continue even for the next year, right? However, you must also agree that more and more orders that we get from Africa, or for that matter Central Asia, we still don't know enough.
Right.
We are learning, and somewhat Far East we know, but we are learning that as well. But we have a lot of activities going in the Far East, not so much in Africa. But electrification is something which is right now in 4 countries that L&T is already in, and
right.
on the back of it we will try to get into other infrastructure projects. I think therefore next year will not be so bad as people think it would be.
From a margin perspective?
Margin perspective.
What are the average margins, let's say, in the Middle East versus India? So when you do projects in the Middle East, India gets about 7-8% for you in terms of operating margins. Middle East gets you what?
No,
5,
we
6?
are talking net margin now.
Okay.
You see, normally gross margin is 10-11%.
For India?
For India, 11%.
And the comparable margin for the Middle East?
7-8.
And then
but
what will
there is no tax.
There is no tax.
Remember
what will be
that.
the comparable margin for, let's say, North Africa or Central Asia?
North Africa will be around same 8-9%, little better than Middle East, because the competition is little less than Middle East.
But not, you don't get the same tax benefit.
No, and therefore I would say net level Africa will give me 4 to 5%. Middle East will give me still volume wise 6 to 7%, but percentage wise 4 to 5.
Okay.
But the volume is higher because for the same effort
You get a
I
bigger
get
project.
2.5 times the volume.
Correct.
The cost is 2.5 times. So whether I put 1,000 people in India or 1,000 there, here I may make 8%, there I may make 4%. Actually, I have made that 4% to be a better volume of profit than here.
So despite the diversification in international projects, you think you'll be able to maintain this improvement in margins over the next fiscal?
According to me, the competition is only sharpening up, increasing.
That's what
More and more and more, as everybody is suffering from the oil price and therefore reduced projects. So it will be very hard to make the profit of 4% to 5% PAT. And volume will be higher, obviously, because the price of the project is higher. But it will be tough. I can only say this time how much tough it will be. I think we are trying our best to make sure it doesn't happen that way.
So what levers do you have internally to help improve margins? Because you said that operational efficiency is something that you will continue to work on in subsequent quarters. What does that mean? Can you elaborate on that? Like,
see,
for
the
instance,
entire,
does that mean...
if you look at hydrocarbon, the entire hydrocarbon group, we have changed our tactics.
Okay.
We have moved almost 200 people out from Middle East as a back office in India. We were doing earlier in front of everyone. Now we don't have to do it. We have understood Middle East. So we have moved that. That has brought the cost down considerably. The operation excellence and the material cost saving and the consumer saving, and as I told you, moving the back office and controlling travel and all, 350 crore we have brought down the cost of hydrocarbon group alone.
Okay.
To improve our competitiveness, and that will continue. We think we have reduced almost 75% of potential, we still have 25-30% to go.
Okay. This might be unpleasant, sir, to bring up, but I think after a very long time I heard of L&T, in fact, downsizing its number of employees over the last few quarters, or at least in this fiscal. Is that something that you think the external
But that's
pressure?
wrong. That's a wrong information.
Okay. You didn't downsize?
No, I tell you what happens. We have 600 sites. When one site get closed meaning over, we move all the people to the next site. Now they may not be nearby. They may be 100 kilometers away. And 25-30% people is our normal experience. Go away, and another 25-30 comes in. So the employees have not come down. The reshuffling of employees have taken place.
So that's not what you declared in one of your quarterly numbers. You declared a cut in employees and the subsequent charge to the accounts because
No,
of that.
it was in the financial report that we have reduced the number of people of 14,000, but 14,000 is peanuts because we have 3,75,000 people.
So, but 14,000 is still a substantial number. All I'm asking is, while
One minute, 14,000 on 3,75,000.
No, of course. I'm not suggesting no.
4%.
Yes, but I'm just asking if
Show me an organization which manages in 4%.
No, I'm just asking if you see further need for downsizing.
No.
If the environment stays as difficult as we have just discussed already.
Yeah, but I think we have not recruited that many to be able to downsize.
Okay, fair enough. That's the point I was trying to make. So you're a little bit more optimistic about top line growth in the next fiscal. Hopeful that you will still be able to squeeze out another 25% in terms of operational efficiencies in margins, and then your international mix of projects will sort of help determine what the margin outlook will be like in FY18, right?
Looks little better.
Looks a little better. Okay, fine. Let's talk about individual business segments if we can. Infrastructure, because that's your biggest business segment. What's going to help things look better there, sir?
Well, I mean, Mumbai metros are still going to expand. We got about 5,000 crore orders from Mumbai metros. We are looking forward to build Shivaji statue because that itself is worth 4,000 crores, right? So there are some mega projects.
But you're confident that this Shivaji statue is not just a poll announcement, and that work will in fact...
It was announced much before the polls, so it looks like it
was
is
aimed
not a
at the
poll.
municipal polls in Mumbai, no, sir?
No. I'm saying it is announced much before the polls for Mumbai Municipal Corporation were announced. So it's an old project. It is not a newly created project.
So it's going to get executed.
Yes. I think it has to be not only executed, but shown to the people in Maharashtra that it has progressed almost tremendously before 2019.
So has it? Do you see any signs of work starting?
Tender is out.
Tender is out.
Hopefully by June the order will be placed, hopefully.
What will be the size of the order if you were to win it?
No, I told you the tender is worth 4,000 crore. What price?
The single tender is 4,000 crores?
Yes, of course.
Oh, wow. I thought they might break it up into various elements of,
the
roadway to it, and then the actual facility itself, the actual
roadway
statue.
is in water.
Waterway, and the actual facility itself, or the statue itself.
No, it's a very, very, very tough project, I can tell you. By even normally L&T standard, it is very tough.
Okay.
And not more than 6 to 8 companies in the world will do this project.
So we are hopeful that Shivaji Maharaj will come to your rescue at L&T besides Mumbai Metro. But that doesn't answer my larger question on infrastructure, because Mumbai is really not the only place
not
you
only
end up doing
that, please, the coastal road of Bombay, the harbour bridge of Bombay, they are all 5,000, 10,000 crore each.
Mr. Naik, 2015, same room, we were doing an interview, we were talking about the same projects. What has moved?
I know.
Navi Mumbai Airport, Coastal Road, Harbour Link. What has moved, sir?
Navi Mumbai, I have never been bullish.
No, okay, because you don't believe that that airport right now at this point in time is feasible.
Right, and I never had been. Even if you go back to my interview, you would not find a lot of positive talking about the airport, because this airport, the promoter has spent more than 12,000-15,000
The current airport in Mumbai.
And how can they, within a matter of 1 year or 2 years, spend another 30,000 crore?
So fair enough. I think they're struggling to get bids also for that airport.
But
yes. My point in this is that 2 years ago, in 2015, when we were sitting and chatting in this very room, approximately I think this time of the year itself, and I asked you about big projects, and we discussed the same big projects.
No.
Where has the name
We did not discuss
We discussed
coastal
metros, coastal roadway, we discussed.
No, we didn't. Because it was not even decided whether it will be coastal project or it will be the bridge.
Harbour link we discussed.
Yes, Harbour link.
But I'm saying nothing has moved.
The fact that we are talking more actively now has moved. For your information, Harbour Bridge was planned more than 15 years ago. Over time,
you're just proving my point
I'm
now.
telling you that. So over time, people have been just hearing once in a while the Harbour Bridge. Now the financing is already settled, right? It is coming under JETCA financing. Tender is already out. Every party who wants to bid have fixed their partnership to build this, because it is coming in 3 sections and everyone will get 1 section. And we are trying to make sure that we try to get 2.
Okay.
And this bridge is going to be more than 12,000 crores. So if we
12,000 crores into 3 sections, so roughly about 4,000 crores altogether. Yeah, so 4,000 crores for each section.
It could be 6,001.
Approximately, I'm saying.
Yeah,
so you're trying for almost business worth 8,000-9,000 crores.
Who was?
Yeah, you said you bid for 2 of the 3 orders.
I know, but the one on the land is smaller.
So, okay.
It is only 2,000.
When will you know about these bid outcomes?
End of the year.
End of this year?
This year.
This fiscal? So by March end you mean?
No. This year is, I am already taking for granted that you keep talking 18, so you have put me also in the syndrome of 18.
So you're saying end of FY18?
September is really what everyone talks about. That it may be decided by September.
Okay.
And
who have you partnered with on this?
Who?
You.
Our partner.
Yes.
Our partner is IHI.
Okay.
Ishikawa Hira Ijima or something.
And can you, any interesting modalities of the partnership that you can talk us through? Or?
They have done this kind of bridges quite a few times.
Okay. It's an equity partnership.
It meets with the qualification criteria.
So this project, if you were to win both parts and build both parts, can you give us a sense of what it will mean? No?
We can't win 2.
Why?
Because the tender condition is 1.
So you could get any one of them?
Anyone, which depends
so
on where we are.
That could be a 4 to 5,000 crore, 6,000 crore.
Yeah, something like that, 4 or 5,000.
And you'll know in September?
I hope so.
Chalo, in 16, 17 years, we've made progress on the Harbour link, sir.
No, we have made progress in last 2 years little faster than before.
Okay, 2 years versus 15 years, that's right. But it still doesn't do anything to substantially change your outlook on infrastructure in this country, does it?
No, I said that...
where is the problem? What is the hurdle? I mean, we've spent years discussing PPP, we've spent years discussing, various concession models, financing models.
I think 2 significant difference. That PPP really, with 4 airports, all 4 were being done by L&T, whether it is Hyderabad, Bangalore, Delhi, Mumbai. Collectively together were 30,000 crores. 30,000 crore was done by L&T in these 4 airports. More but not less. Right, that has gone. The private sector who came on PPP, including L&T and IDPL, their experience was not good enough in terms of being able to make money. Lots of debt was taken and liberal debt equity ratio was done. Like people have financed some projects at 20/80, right? Now they have not been able to repay the loan. So there is no more loan being given to them. So they cannot promote any more projects. So the PPP is now at a much, much, much reduced level.
And in fact, the government recognizes that. So they've been considering various other financing concession models, etc., outside of PPP. But that's not yet helped move that logjam in any way.
You need a lot of money to take over the private sector work in a, you can say, hybrid or with the government.
Where is that money going to come from?
I would say that therefore the activities are slower than what is being stated.
So what will help unlock this jam? Where is the money going to come from?
Get some money.
But who is going to put up the money?
The government has to put up the money.
Why would the government spend money bailing out the private sector?
It's not a private sector. The new public sector infrastructure all over the world, infrastructure is set up by public sector.
No, but that's for new projects, right?
New project,
for the existing projects that are stuck, for them to come unstuck, so that the private sector can return to investment. One of the key things we've been talking about this economy is the absolute slowdown in private sector.
I don't see private sector coming back to infrastructure investment for the next 3 years.
For the next 3 years?
At least.
So it will entirely be dependent on PSU investments?
Correct. And hybrid. And annuity, where you are guaranteed, there is no risk. Provided they have an ability to finance the project. Even if you guarantee,
Yeah.
The bank should be willing to pay to the same groups who have defaulted.
So where does L&T stand in all of this then?
We have decided not to go into PPP for the time being till we resolve all our old problems. And for last 2 years, we have not bid any project. We do construct, but we don't put money in it.
No, I understand that, and I will talk about asset sales of existing assets so far, but I'm curious to know if you don't think private sector is going to come back to investment in the next 3 years, if the government expenditure on the government's balance sheet is going to be fairly constrained and it's only down to the PSUs, then how good a chance do you stand in being able to substantially grow your top line in these PSU projects that are put out?
Therefore, I've told you that we are exploring new geographies.
Okay, fine, all right then. Okay, so it's looking bleak, if I can put it that way.
I won't say
for
bleak.
Domestic infrastructure.
It is not looking
but
that
you've just
positive.
described it. No. You've just
No,
described.
I didn't describe as bleak. I did not. I said that the private sector to come back into
Will
the
take
investment
3 years,
mode will
you
take
said.
3 years. Okay?
Correct.
But I also said that the government has to step in either by hybrid annuity or the tender method.
Are you seeing any movement on that front?
Yes. There are 14 tenders likely to come out in the next 2 months.
On hybrid and annuity projects?
And the other road projects. It can be hybrid, it can be annuity,
And
it
these
can
are
be
what?
tender.
Typically road, highway, big major highway projects?
Yes,
or
yes.
mostly roads and highways?
Roads and highways.
But you work in a very select aspect of the roads and highways business.
Yes.
So not much of this stands to benefit you in any big way.
No, it does, because sometimes 4 projects is equal to what we select is 1. It is so big and so complex.
Okay.
Third thing you must realize that last year we got a breach in Bihar under Jaitka financing. And there were 2 Chinese who also bidded for it, and we were the third one, 3,500 crore across Ganges, and we won, beating both the Chinese, right? Chinese could not be said no because it was international financing. Bangladesh, we have won the breach of 2,000 crores, again across Brahmaputra. So we are going to bid again. We just won the metro of Dhaka, worth 3,500 crore, 2 sections. We are bidding more. So there are a lot of prospects around India which we had not paid much attention to last time or earlier year. Now we are. You know, our backlog in Bangladesh is 11,000 crores, just in one. It's like one full state of India.
Can you pin your hope more on states stepping up infrastructure spends, or do you believe their too state finances are also beleaguered? They too are weak. Okay.
We have to find new countries.
Yeah, well, so therefore that's why I keep saying that the domestic infrastructure outlook is bleak. The country's infrastructure outlook is bleak. Now L&T'S may look better because you're exploring new geographies.
Not only that.
Yeah, so bleak is the right word.
Not bleak is not the right word. I would say the domestic outlook of infrastructure does not look that much rosy.
Okay. Crude prices have recovered a little bit. Is that crude prices globally have recovered a little bit? Yes, it is.
From the point of view of revival of the projects in Middle East and oil producing
Exactly.
countries.
Are you seeing any early signs of green shoots there?
Yes, of course we are seeing now that the things are a little bit coming back.
Okay.
Because now it is $52, $53, it was down to $35.
So not just in fuel or hydrocarbon businesses, but the big infrastructure, projects that were coming out of good revenue for these governments. Do you see any green shoots there as well?
All these countries have oil as a main income. And that income is spent in building infrastructure and many other things. So they are all coming back slowly. It is not $110 price, let's be clear. But it's neither 25 or 35. So 52, 53 is a reasonable balance.
Then explain to me why you said that your international business, which is roughly 30% of revenue right now, will go down to 22%, given that you are looking at new geographies, you are seeing green shoots in the Middle East, you're hopeful that projects, I'm talking about the next fiscal, you're hopeful that projects will start coming back both in the hydrocarbon sector as well as in infrastructure in these countries as revenue improves for these countries' governments. So why then down to 22, 23%?
No, I'm telling you, Middle East, we are seeing the sign of revival. You asked.
Not yet project bidding, okay.
There sign revival, and it will be 6 months to a year before they will come up for bidding, okay?
Okay.
So therefore I said that the Middle East will be somewhat less and 22 to 25%, including some of the new geographies. I also told you that the new geographies, whether in Northern Africa or whether it is in some part of Myanmar and Thailand and other places, we are learning.